This is our look ahead to Tuesday's key political and financial events. The IMF arrives in Madrid to begin a third review of Spain's banking reforms. The IMF's monitoring is part of a broader €100 billion deal agreed with Spain last July. The fund will present its findings on June the 3rd. Madrid also selling 3- and 9-month Treasury bills ahead of a full bond auction on Thursday. Spain has already raised more than half the funds it needs for this year in less than 5 months. Bank of New York Mellon's Simon Derrick says the bond market will continue to look favourably on Spain and the Eurozone periphery despite their deep economic problems.
There's always something around the corner, and I think on that particular perspective, particularly given the low yields that are currently available in Europe, it is perfectly possible that we could see a sharp backup if people start to worry about any one of the southern European countries in the next few months.
Meanwhile, little change expected when the Bank of Japan meets on Tuesday, despite jitters over bond market volatility. It's promised to kickstart inflation by injecting $1.4 trillion into the economy. Some suggestions today, though, that Japanese authorities may now want to slow the yen's fall. Easier said than done, says Simon Derrick.
Whether they're capable of stopping that fall or not, I think it's a rather different matter. But certainly I think that the Ministry of Finance, the Japanese government and the Bank of Japan would be more than happy to start putting the brakes on the yen right about now. And that means it's important to watch this week's Bank of Japan meeting.
In the UK, we've got the latest inflation numbers. Headline CPI seen falling back slightly to 2.6% in April from 2.8% in March. A welcome decline for the Government and Bank of England. But even at 2.6%, inflation would still be much higher in Britain than all of its G7 partners. The broader retail price index also expected to ease to 3.1% from 3.3%, and producer prices seen falling to 0.9% in April from 1.3% in March. PPI inflation data also due from Germany. The annual rate of price increases expected to halve in April to 0.2% from 0.4%. On the earnings front, luxury goods group Burberry announces its preliminary full-year results. Strong demand from China helped it beat forecasts, with fourth-quarter sales reaching £503 million. Britain's largest clothing retailer Marks & Spencer also reporting full-year results. Analyst forecasts predict a pre-tax profit of £658 million. That would be down 7%. It has recently revamped its women's wear range in a push to reverse nearly 2 years of falling clothing sales. Full-year results from mobile network Vodafone. Revenue seen down 4.4% to £44 billion. But the real focus of Tuesday's announcement is whether Vodafone plans to sell its prized 45% stake in Verizon Wireless, in what would be one of the biggest corporate deals ever. That's our look ahead to Tuesday. I'm Jamie McGeever. This is Reuters.